Today, we're diving into a super powerful tool for scalping and day trading, the Swing ATR Trend Indicator, sometimes called Black Flag FTS Indicator. This thing is a game changer for spotting trends and making quick, confident trades. It's one of my go-tos and I'm pumped to show you how to use it. So here's the deal. This indicator helps you see where the market's heading by smoothing out price action and giving you clear signals. It's perfect for beginners because it's not cluttered or confusing. You can find it on platforms like MetaTrader with a quick Google search. But today we're gonna use TradingView. It's user-friendly and awesome for charting. To set it up, head to the TradingView, click the indicators button at the top, and in the search bar type Swing Arm ATR Trend Indicator. Hit enter, and when it pops up in the results, just click to add it to your chart. I'm gonna walk you through real examples using gold, XAU/USD on the 5-minute time frame. So why gold? It moves fast, and on a 5-minute chart, you can catch those short-term swings without staring at your screen all day. Let's dig into how to actually use the Swing Arm ATR Trend Indicator. The indicator is showing you lines that move with the price, and those are dynamic support and resistance levels. If the price is above the line and the background's green, this could be an uptrend. But if the price is below the line with a red background, think about downtrend. You'll also see dots sometimes where the price reacts to those levels. The ATR part measures how much the market's jumping around. Now, time to make this super simple for trading, okay? So dive into the indicator settings. You'll find the inputs tab right there. Leave the stop like indicator time frame and trail type exactly where they are at their defaults. Easy peasy. Now here's the little tweak we're gonna make. Change the ATR period to 5. This just helps the indicator react a bit quicker to price moves. Perfect for catching those shifts. And then, leave the ATR factor to 5 as well. This works hand in hand with the period settings. Got it? Okay, hop over to the Style tab next. This is where we just want the fib lines. These lines are really useful because they often show where price might bounce or pause. So you're gonna turn off everything except the fib 2 and fib 3 options. Just those two are what we need right now. Alright, cool. Now we've got these two specific lines showing up on the chart, fib 2 and fib 3. Think of them like a key band or a channel that the price is moving within. We're just gonna use these bands to spot potential places to jump into trades. Like open a buy, they show us areas where the price is potentially turning around. But gotta be totally real with you guys. Relying solely on a single indicator like this can totally lead to losses. So to actually make some money with this strategy and really boost our chances of winning trades, we got our trusty Swing Arm Trend Indicator to add to the chart one more time. Add it again. Same process as before. Click Indicator, search Swing Arm ATR Trend Indicator again, and click it to slap it onto the chart. Just a quick pause guys. I'm curious, are you guys already using this indicator in your trading? Or maybe you've got another favorite go-to indicator you rely on? Drop a comment down below and let me know what you are working with. Alright, now this second time we're setting it up differently because we needed to show us something else. These are specific plot backgrounds. So head back into the settings window for the second instance of the indicator. Go to the inputs tab again. This time we're changing the ATR period to 9. Notice it is longer period than the first one. And yeah, we're gonna bump up the ATR factor too. Crank that number up to 9 as well. These longer settings help us see the bigger picture trend. Okay, final step for this one. Jump over to the style tab. This time, we need plots, especially the background ones that fill the chart in colors. So turn off everything except for the very last two options, those plot backgrounds. These colors are gonna be key for confirming the trend. Make sense? Alright. Quick pause here guys. If it is making sense so far, do me a quick favor and give this video a big thumbs up. It seriously helps out the channel and tells me you wanna see more stuff like this. Appreciate that. Check out this chart right here. This is gold on the 5-minute time frame. Just as an example, see how the background plot is green here and the price candles are hanging out above the green area? That tells us the bigger picture trend is looking strong to upside right now. So naturally, when the background is green, we're only looking for buy signals, like opportunities to make money going up. Now look closer at the price candles right here. See how they're actually below the Fib lines in this specific spot. Even though the background is green, we're not just blindly buying yet. What we gotta wait for is for the price to actually make a move and punch above the Fib band. See, it happens right here with this candle. That's breakout. The bullish cross above those Fib lines. That's our official buy signal with this strategy, a potential chance to make some money. So when you get the signal, that's your green light to open up a buy position. Now where do you put your stop loss to protect your capital? Real simple. You put it right there at the Fib line you just broke above. It's like your safety net and your target. We're aiming for a potential reward that's double the amount you're risking on that stop loss. So if you stand to lose 100 on the stop, you're aiming to potentially make 200. Pretty cool way to maximize your potential profit on each trade. Now, the same idea goes for sell trades. It's just totally flipped around. For a sell, you'd look for a background plot to be red. That tells you the bigger trend is looking down. The price should generally be below the red area. And your sell signal, price needs to break below that Fib band, a bearish breakout downwards. When you see that happens, that's your sell signal, a potential profit opportunity going short. You'd open a sell position, put your stop loss right at the Fib lines you just broke below, and again, aim for target that's double what you're risking. Talk is cheap, right? You want to know if the strategy can actually make you money in the real market. So I went ahead and did some backtesting on this strategy. I ran it 100 different trades to see exactly how much money it could potentially make over that sample. And check out the results. The win rate came in at its solid 65%. That translates directly into more winning trades and more chances to grow your account. We ended up with a total profit of 154% over that series of trades. Yeah, there was a streaks. We even had 9 winning trades in a row at one point, but also a streak of 5 losses right after. Because that happens in trading and you gotta be prepared. But the maximum your balance ever dropped during those losing periods, that's called the max drawdown, was only a small 4.9%, which is great for protecting your capital. And check out the profit factor. This is huge. It was really a strong 3.71, which basically means for every dollar risked, the strategy made $3.71 in profit. That's how you stacked up the gains. Now, this strategy is awesome for beginners, but if you're curious about the strategy I personally use the most in my own trading, I've actually put the exact video right here on the screen for you. Seriously, if you want to dive deeper into how I trade every day, that's definitely the one to watch next. See you in the next video.